From the morning reading, buying pressure headed into Tuesday had been so strong that the New York Stock Exchange volume into positive stocks overwhelmed volume into declining ones. That pushed the ARMS index, aka trend, to the lowest level in more than 5 years and among the lowest levels in history. The last two times that occurred, when stocks had been near a low, were at the bear market bottoms in 2002 and 2009. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:52 a.m. Central Time, and I'm recording this in preparation for the market day of October the 7th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive in, see what we're dealing with. And we've had pretty well broad market bullishness in our overnight. All four the U.S. indices are up. The S&P's up over 0.5% at the time of this cut. Russell less so, about 1/3%. NASDAQ about 0.75%, and the Dow up about 0.6%. Crude oil up sharply 2.1%, and then Euro down about 0.13, so just fractionally. Bonds down about 0.2%, and gold up about 0.2. China scheduled to come back, I believe, tonight. They are on trade holiday, so this number here actually refers to several days ago. They've had a very long trade holiday. Hong Kong was open though, and it's up over 3.1%. Japan up about 0.75%. Germany up about 0.75%, and the United Kingdom up about 0.4%. In terms of macroeconomic reports for today, the main thing would be crude oil, and that is during market hours. If you trade in crude oil or in that industry group, be aware that that will occur. And then we do have a bond auction. If you're in bonds, that could also play with you a little bit. Let's see if there's anything else of note. Tomorrow, of course, there'll be the weekly employment and nat gas storage, 30-year bond auction, and FOMC minutes. Now, the FOMC minutes have largely been discounted this time, but it still carries a red flag, and who knows what might come out of that. That could very much move the markets, but generally that is not expected to be a big mover this time due to the fact that the unemployment, the monthly version, came out after these minutes, and that is expected to essentially have trumped what occurred in these minutes. FOMC member Williams speaks in the afternoon, so be aware of that. And let's see here. In terms of volatility conditions, we've been ebbing off. You see short-term VIX now down to an 18.19. Look at this. Skew also came down. And you see the IV percentiles still all in the lower third across all four markets. No standard deviation moves were put in yesterday. So all in all, a relatively quiet day. In fact, we'll take a quick look at the charts. We did have something of an inside day yesterday with both the, and it's probably really close, but the open and the close both within the prior day bar. So something of an inside day, not unexpected at all after the action of the previous 5 days. Right now, of course, we're gapping up, and so we'll see where that takes us. We're still bumping our heads up against this area of resistance. And there's quite a stack of resistance above us for the next about 50 points. You have this area here. You have the top of the FOMC wick. You have the bottom of the prior multi-week range action. So three kind of key areas that would have to be bumped through in that next short distance. Hard to believe that we go powering straight through that without some sort of external stimulus. And you see here the Russell also bumping up against resistance areas, so we'll see how well that does in the days to come. Also had a very much a similar inside day yesterday, and then NASDAQ very much an inside day here, and then the Dow put in something of a doji with its open and close right at the prior day close. So yesterday was just a very, very calm internal day. Not a lot of volume compared to previous days, and you kind of expect that. You expect volume to diminish as the bulls continue. If you get a lot of volume coming in at this point, it's probably a down day, unless again we have some sort of external news. Let's take a quick look at VIX futures. Nothing really exciting there. We did get a close right at the 20 area, so 19.95. So we're kind of watching to see, does the VIX futures break down and come into this more kind of tame bull market area, or does it stay above that 20 area, which is usually indicative of bearish conditions where you retain that volatility. And let's go on to the regular daily report. We've had some changes here today. IBD status still in confirmed uptrend. GMI index did improve a couple notches here in the last couple days. It's now a 3 out of 6, but it's still a sell signal, and that author remains in cash. Primary market condition still remains as strong bear. The decision points charts, we have seen some changes on the short term. We have up arrows across the board on short term. And on the NASDAQ, it's also signaled a long-term bull. So pretty significant improvement. A lot of red arrows here still on intermediate and long term, but still you have to recognize that there has been some upgrade in the condition here. And intermediate term market posture, weekly bullish. Consensus here, I'd still call this a market in transition, and the question is this a beginning of a trend change, or is this a market which is in consolidation and then trend continuation? So not obvious at this point, and that should be something of a cautionary stance for you, as it were. Now, if you're a bull, certainly we've seen some improvement in these metrics in recent days, but at the same time, it's not all bull all the time. You clearly don't have that, in quotes, permission to just be recklessly bullish in these kinds of conditions. At the same time, if you're bearish, you also have to concede that there have been improving conditions, and that the near-term low may be the low for the immediate future. So just kind of keep that balance in mind. Position sizing opinions are based on investor up to 100%, based on volatility up to 75%. From that intermediate term market posture, it's weekly bullish, though the S&P is getting close to going over 50. If it were to have another strong day today, it could easily go over 50 and be outright bullish. So that would be a continuing improvement for the bulls. Dow's already bullish, as is the NASDAQ, healthily so, well up over 50. Russell still weekly bullish, and that still is something of a fly in the ointment. You expect that both the NASDAQ and the Russell would be leading the charge of the strong bulls in order for the broad S&P to also be likely to be able to sustain bullish action. The hedge warning status remains threshold level 1. So there are some elevated risk conditions in this market, as you could recognize from the conditions above. This is not an estimate that we're going down, nor when or how far. but it is a recognition that there still are some elevated risk conditions in this market, but certainly nowhere near what we had maybe 5 or 6 trading days ago when we were at a level 3 and risk conditions were clearly more elevated. A number of things have come down. In fact, you see from the volatility base, there's really only a couple things to highlight. VIX is still up over an 18, but it's getting close to that 18. It's about a 20 right now. The skew still up over a 125. So that dropped actually from yesterday. It was up over 130 yesterday. We still have about a 9% probability of a 2 standard deviation move in the next 30 days based on that skew rating. So that ebbed a little bit from yesterday, but it's still elevated from kind of normal conditions. You also had a really nice day put in at the New York Stock Exchange group yesterday. New highs 463, so that certainly is one for the bulls. Something for the bears still. The intermarket risk aversion indicators, we've got 4 out of 5 as risk off. Special opinions, no changes since yesterday here. VIX is outside the acceptable window for novice traders for option income strategies, but aggressive traders should consider, that the elevated premiums are prime time for you. Just consider reduced position size, or at the very least, potential for higher than normal delta and vega moves. Cover call strategies, cautiously bullish, acceptable to initiate new positions, even for novice traders. Use a 1-to-1 ratio of in the money and out of the money strikes. Reduce position size or legging in through the sell of puts to initiate your position. It could also be a strategy. Let's see here. Put selling, very similar. Cautiously bullish, acceptable. Consider spreading those positions off. Aggressive traders consider scaling into full-size positions. In terms of sector specific, a lot more green here. We've seen a lot of healing here in the last couple days. Healthcare remains the one sector that has been really beaten up, and even with the last couple days action, we've seen IBB, the biotech, continue to struggle, as well as XLV, the larger S&P sector. In terms of the broad action yesterday, mostly it was about materials and energy. Huge day for crude oil yesterday, and you see really rest of the market more weak than positive. So again, you can have this kind of headline number that looks to be positive, and yet may not be a wide breadth that's carrying that action. You could get a polarity here as you did with energy. Big move in energy makes things look a lot better in the broad market than they really were overall. And that should be enough for today. Nowhere near as much material today as we've had the last couple days, so a little simpler for our morning routine. As always, we greatly appreciate you retweeting us to your Twitter followers, to your StockTwit followers, liking us on YouTube, subscribing to our YouTube channel. That's how we get paid for doing this effort in the morning. We very much like to see those likes and those retweets and even comments coming into the email at support@falconglobaltraders.com, and give us a little paycheck there. Give us a little love. Greatly appreciate that. We do still have this announcement out there, the 40-hour course, Self-Directed Active Money Management, in collaboration with the Chicago Northwest Burb Trading Club. 10-week course. Actually a total of 43 hours of educational material altogether. It is the 9th time this course has been taught by our friend Nick Fosco. You see the purpose here. And as it stands right now, it's actually the start date is to be determined. We're looking to put a certain number of people in that class. So it will be taught live in Schaumburg, and it will be simulcast. So if you're not local, no worries to the Chicago markets. You can certainly participate in everything through the simulcast. More details about course description and all those kinds of things, sign up, etc., can be found at this website. So keep all that in mind. And of course, to have a greater understanding of what we do at Falcon Global, you can go to this website, and obviously we put all these practices into our trading. We model that, and you can get more details about that. Disclaimers as always. Hit the pause button if you need more time to review this. And we look forward to seeing you back here tomorrow morning before the market opens with the market preview from Falcon Global. Good trading.